Welcome to the Lowdown. It's been quite a week. Let's get started. Well, Putin finally did it with a full-scale invasion into Ukraine. Despite sanctions and despite all the threats, he moved forward, we all know by now. And what has the market done? What is the market's reaction to this? And what should we expect going forward? That's what we're going to talk about today. So I have a few charts I want to show you from some of the experts here in our building on reasons why we should stand pat and basically why we don't want to sell, how we should handle volatility during times like this. So let's go to those charts. So let's take a look at this graphic. So you can see there was many different events, many different situations in which we would probably want to sell, take risk off the table, and basically overreact. I think today, and what we're seeing now with Russia and its invasion of Ukraine, is just another one of these situations. But let's just talk about the market reaction. From an investing standpoint, geopolitical events tend to be a brief trading event. You can see some of those in here. But this situation has added a complexion in terms of the pandemic on top of it, the global supply chain issues, the switch from the fiscal tailwinds and headwinds, and of course, a shift towards monetary policy. At a minimum, this halts the economic recovery in Europe. Natural gas has basically jumped 35% overnight. This could push energy shock into risk in a recession. The economic knock-on effects is being seen in the EU, commands a large chunk of global GDP. Energy shocks are de facto taxes on consumption and a drain on real purchasing power. Russia is also a very significant food supplier to Europe. It's an enormous global shipper of grains. As you can see here, there's been many reasons to pass a sell, but I would advise stick to your financial plan and understand your risk profile, and this will keep you from making irrational decisions. Let's take a look at this next slide here. As you can go back, if we wanted to isolate war events, you can see in each one of these, the Vietnam War, the Gulf War, Afghanistan War, the Iraq War, and the Crimean crisis. In each time, the markets over a period of time moved higher, and we believe the same will happen with this crisis. So let's talk about in regards to corrections. Look here at the S&P 500, historically posting strong returns following corrections. The S&P 500 average price performance following corrections excluding bear market since 1970. So you can see here 3 months, 6 months, 9 months, and 12 months what happens to the S&P price performance after these corrections. Again, this excludes bear markets. So this all gives us, I think, good reasons why we should stick to our original plan, stick to our financial plan, and basically not make irrational decisions based on this current sell-off. This is a good time to go back and talk about our bucket strategy. And what this is, it talks about where we're going to take distributions and the timing of our investments. And today, if you're looking at the market and where is the volatility? Well, the volatility lies in buckets number 3 and number 4. And if you go down there and you look at that time period for each one of those, bucket number 3 talks about we don't need those assets for 6 to 10 years. If you look at bucket number 4, it's 11 years and beyond. So those are the risk assets. Those are the assets that are being sold off with the volatility or being volatile today with what's happening. But buckets number 1 and 2, this is where your current income and distributions are going to come from if you're retired and receiving those. And buckets number 2, those are the income producing assets that are going to fill bucket number 1. If you go back to the slides earlier that I showed, you can see markets recover well before buckets number 3 and 4 have to come into play. Bottom line is we will never have to sell a stock because of market volatility as long as we understand our distribution strategy, and that is why we have financial plans in which we discuss all of these for each of you. Well, today was quite volatile. We saw after Biden's speech, he came out and basically one of the things that he said, and I thought that was critical, is they did not throw the full sanctions at Putin.
Sanctions that we proposed on all their banks have of equal consequence, maybe more consequence than SWIFT number 1. Number 2, it is always an option, but right now that's not the position that the rest of Europe wishes to take.
What does that mean? The SWIFT banking system, which is their access to dollars, that is one of the biggest weapons the United States used in regards to any sanctions that they can put into play. And what he came out and basically said is they're not fully putting the sanctions on the SWIFT system. So that gives, in my opinion, Putin some bargaining power at this point. I think at the end of the day, we still don't know what his overall end game is. I think another important matter that came in today was China basically came in and somewhat sided with the United States and UK, and that leaves Russia with very little bargaining chips on the table. Basically, it's time to fold. I hope you found this informative. If you need to email me, michaelsmith@avidianwealth.com. Happy to send you any more information, or if you have any questions, please feel free to contact me. Thank you for listening to The Lowdown.